Welcome to the Saturday night backtesting session. We're going to get some review of what potential trades we could have taken this week in the markets. And the market started this week on the 6th. So we'll go from the 6th of June. We'll work our way back to the 6th. So we'll start in the morning of the 6th. Around 3 a.m. is fine. Right. Okay, so looking on the 15-minute time frame, what can we see? So on the 15-minute time frame, we can see that, okay, if I just remove these indicators for now, we can see that we were quite bearish, but just checking on the 4-hour, again, quite bearish. And we were kind of looking at this area of potential entry. So let's head over to back to the 15-minute. So what I can see is we've had this inside bar candle form. So that's my refined order block, and that's a supply zone. So what I can also see is triangular liquidity. So that would be a potential area of target to break through. So what I want to see is a potential break of this high, a breach of this high, up till this area of supply. And then I want to look for confirmation entries on the lower time frame. So let's see what the market wants to do. So just gonna go along as it is. Okay, so we're getting close to that area. Okay, now as you can see, I'm just gonna go back a bit. As you can see, we are tapped into the zone. So I'm just gonna go back one candle. Okay, now let's head over to the 1 minute. And we know that we're tapped in, but we don't know where the potential entry could be from. So let's look at this from an institutional perspective. So we've had that tap in. That could potentially be a liquidity sweep because there's a lot of liquidity above these highs. So I'm waiting for my confirmations. Okay, a flip, quite clear. And nothing yet. So potentially that could be considered to be a change of character. So this over here could potentially be a change of character. So the area I'm kind of looking at for validity is this point of interest over here. So let's see what market can kind of achieve in that. Okay, now we've had a bit of a break of structure. Okay, now we're in our zone. So this is where our trade would be. So we'll take a short position around 55, I'd say, just into that zone. Our stop loss around, see, I would say 2.5 pips. We have this high which we need to cover. Of course, it's nice to have an amazing risk to reward, but there's no point if you're going to get taken out. Now, heading over to the 2 minute, just to zoom out to target that liquidity. That liquidity kind of ends there. So yes, we could target all the way here, but best bet would be to target that recent liquidity and then head over to the 15-minute and look at potential weak lows. So this is a potential weak low. This is a potential weak low, potential weak low. This is kind of what we're looking at for final targets. So I'm going to mark that up by trend line. Okay. And what we can also see is that if I turn on my kill zone, we can see that the Asian session range matches up with that low. So I'm actually going to be targeting this low, even though final targets will be down here. So we always target the Asian session range if it's the first trade of the day. So getting off that, I'm just still going to mark up this low as the Asian session range. Now heading over to 1 minute. Potentially a trade. What I'm not liking right now is this these highs over here. So these are potential liquidity points, and I haven't received a break of structure just yet. I haven't observed a break of structure. So what could that tell me? That could tell me price isn't keen or willing enough to move downwards. So would I enter this trade? Potentially on 0.25 risk. So generally, I'm going to enter on lower risk if I think that possibly price couldn't move further down or hasn't given me correct confirmations. Remember, we follow a strict trading plan. So we've seen a potential liquidity grab. It's not obvious, right? So it could have been that this is the potential liquidity grab. Liquidity grab, order block clear, yes. Lower time frame flip. Have we seen a flip? Possibly, but not evident enough. This could potentially be our demand zone, which could be playing off of. So yes, we've seen a flip in a way. We can argue that that's a flip. Have we seen a change of character? Yes, we've marked that up here. Very obvious. Have we seen a lower time frame break of structure? No. So we're missing out on that confirmation, which means we shouldn't enter the trade. However, because we have every confirmation except one, we'd be willing to enter on less risk. So 0.25 is what I'd be risking. But remember, in backtesting sessions, I always risk 1% to represent 1R. So if I'm risking less, I'd risk half of that, so 0.5R. So if I just go to the backtesting journal and clear up the chart, what can we see? So it was Euro US dollar. So again, this is a QuickSnipes backtesting chart. Short, entry date, we don't know. Stop loss was 3 pips. Result, we don't know. Gain, we don't know. Before screenshot. Before screenshot. Over here. Okay, now we've entered now on the 6th of June. So we can mark that up as the 6th of June. And now let's play out the trade. So coming down nice, stop loss hit. So we're taking out for minus 0.5% because we said we were going to risk less. Sorry. I believe that is off screenshot. Okay, so exit day, obviously same day. Now, you've taken one loss for the day. What do? Step back from the chart? No. Enter more trades? No. What do we do? We wait for confirmations. Okay. We wait for that confirmation which we missed out, which was that break of structure. So I want to see this low go. This trade is not invalid until this zone is broken, right? So this could potentially be the liquidity sweep I was talking about off of all this liquidity over here. So that could have potentially been the sweep. So we can actually mark that as a liquidity sweep as we see it for now. So let's just delete that. So as we see it, that could be a potential liquidity sweep, unless we're told otherwise, but we're not. So, okay, that could now be our liquidity sweep. So in fact, we could have 2 liquidity sweeps because there was still liquidity above those highs. So this could be a liquidity sweep. So now we have potentially 2 liquidity sweeps. So you do want to wait for that low to get taken out first. Potentially more liquidity sweeps. Okay, now the zone's invalid. Now we can review. Now, potentially we could be reacting for something within this wick because we never covered this wick. So that's where our review comes in and we've noticed our potential error. So we're not fully invalid yet until that high is completely broken. So now we're kind of ranging. We haven't broken any structure yet. This change of character is invalid because price kept continuing upwards. So still forming new highs. If we take out these lows, then that's a change of character. Okay. So yeah, so that's a change of character that I believe. Oh no, it's not. It's not convincing enough for me to see a change of character. I need to see a body closure. So now we have a change of character. So there's our change of character. Okay. Again, there's liquidity below these lows. We've had a change of character. Now this is our error of structure, which I also look to take out. So let me mark that up. So if that's taken out, that's a break of structure. There we go, no break of structure just yet. Okay, there's our break of structure. It's very unconvincing. However, still valid as a break of structure. There is a body closure, but it's not very clean. So now we can move up a time frame because there's choppy market conditions. And we can see where are potential entry zones. So there's nothing clear to me. Can anyone see a clear order block? You can unmute yourself if you'd like to talk about anything. Can anyone see a clear order block? Because I personally don't think there's anything clear about this trade just yet. Yeah, I don't think anyone can. So let's just keep watching and waiting. There we go. Now, can we see something slightly clearer? Potentially. So if we drop back to 1 minute, if we just remove this, yes, these were valid, but now we can see something a bit more evident. So what we can see is a change of character, which I'm marking up now. And we can see a clear break of structure. Now, do we see a clear order block? Can you guys, any of you, feel free to unmute and just say which order block you think is potentially an order block?
One right at the top.
Right at the top? Yeah, okay. So we're going to mark that up. Okay, is there another one?
What? Yeah, just there.
Yeah,
that one.
Okay.
Yeah.
So that's potentially an order block too. The only thing I'd say is, remember, we have a decisional and we have an extreme zone. So our decisional zone is basically the lower down order block of the extreme, but it's still a valid order block. So you need to look at imbalance when it comes to this sort of trade. So fair value gap is also what they're known as. There's no proper, yes, there's a fair value gap there, but there's no proper clean area where the fair value gap started. So they started here. So I'd prefer to enter up here, but I'd consider confirmation entries up here. So if this was to play out, it was to go there and then drop, then I'd enter off of the order block that was formed there. So let's just watch it play out. I wouldn't be looking to enter directly off of anything just yet. Okay, so let's just move up a time frame because of the huge drop. Now, moving up a time frame, we can see that that order block doesn't even exist. So at this point, I'd be happy to remove it. If it doesn't exist in a higher time frame, and I'm not saying if you go to a 4 hour and that order block disappears, that it's invalid. But it does mean that if you move up just maybe 1 or 2 time frames, you are looking at something that isn't valid. So yes, there was liquidity down here, which you've taken out. I'm just going to mark up the liquidity. I'm not really going to mark it as a sweep because price is going to potentially go back through it. So let's just mark that up as liquidity just for now. So it's clear that it's liquidity. Now I want to see price get back up to our order block. So a bit of a range. That's nice to see at the bottom of a potential move. Okay. Now, can anyone tell me, would it be more likely that price will get up here, or could we look for something in here, and tell me why we could or couldn't?
You could look for an entry where the new area, because obviously price has gone further down, so the range has been extended.
Yes, you could. However, so what I tend to stick by is that if there's an area of loads of fair value gaps, especially a particular big one, then yes, yes, you can enter off of here, but personally, out of experience, I'd rather miss the move or risk missing this move in order to get this move. So personally, I wouldn't be entering, but it's valid to enter off of here. So yes, that could be a potential entry, but to be safe, because we're on the 3 minute, we'll go there and we'll just lower down time frame and look for a clear order block. So that's probably that one, or potentially this one, but if it's a 1 minute, I prefer to enter up a bit higher. So let's just stick to 2 minutes, a bit cleaner. However, there's no fair value gap there, so I'm gonna go for this. That could be a liquidity sweep. Okay, so let's just watch price play out. Remember, the trade is always valid until it gets to my take profit. Is that my take profit? It is at my take profit. So the initial trade is now invalid. So now I'd go to the 15 minute. We haven't tested this low yet. So if we do come up now, we could consider this area, and this area of highs to be liquidity, couldn't we? So talking back into the 1 minute. So price is rejected off of something in there. So let me just go there. Yeah, I'll just rise a few time frames because the market isn't clear. Yeah, so it looks like price is rejected off of that area. Again, like I said, if there's a few imbalances, it's better to take less trades that are more profitable than ones that have a lower probability of hitting that take profit. So I'm okay with missing this move. So now at this rate, what I do is I clear the chart, head over to my 4 hour, see what the chart is telling me. The chart is telling me that there's been a 4 hour change of character. So that's a really strong confirmation due to the fact that it's a higher time frame. So going to the 4 hour, there's a change of character. 15 minute, you can consider that to be a change of character, provided this is a body closure. So let's just go. There we go. So it is a change of character. Now there's a few order blocks we could be looking at. So on the 15 minute, we can mark up this as an extreme leg, mark up this as a potential decisional, and I don't really want to be entering down this low because it's quite a move, and the impulsive move happened here, so this would still be my kind of preferred entry area. So we've come back up. I'm still waiting for something a bit cleaner because we tend to take less trades but high probability cleaner trades. So again, we're looking for that. You could argue that this high is swept by this high over here. So let's mark that area up and just kind of zoom in on the lower time frame. So I'm just going to mark that area up. That's not an order block or anything. Let's go to a 3 minute. So potentially we could be looking at that as a liquidity sweep. So let's mark it up. What date are we on? We're on the evening. We don't usually trade this kind of time, but as you can see, it is a backtesting session. It is a chance to experiment. So we have this area, but there's no proper fair value gap there. So I'd prefer to enter off of this order block. It's also an inside bar. It acts as another confirmation bar. So that could be a potential entry. Heading over to 1 minute, what can we see? Yeah, we can still mark up this area because there is a bit of a gap there. So maybe the indicators just haven't picked it up. So let's go back onto 3 minutes for chart cleanliness purposes. So I'm going to go to 15 minutes because we are quite far down. As you can see, price gap back up a bit. Okay, taking out a bunch of liquidity there. So that high could potentially be a liquidity sweep that we just formed because that was a liquidity wick. A liquidity wick is a wick that breaks through trendline liquidity, or as I like to call it, triangular liquidity. So now we're in a bit of a range. So we kind of need to monitor price, see what it does. Okay, so again, this is a 15 minutes, a bit of a stronger time frame. So we've kind of tapped into this fair value, kind of, I'd say we filled this fair value. Let's just wait for an impulsive move. Okay. So this is our impulsive move that broke this structure. So let's mark up this 15 minute area. Then we'll drop to our 1 minute. Now, this is a really nice potential entry area. I meant to turn this off. And we'll mark up this order block. So what date are we on? We're on the 7th. So we've already entered one trade on the 6th. Okay, we're in this area. Like I said, we have had that impulsive move. We have to have that 15 minute area form. Then we have had that confirmation of, okay, potentially this could be a good move because we've got liquidity above these highs. This could be a liquidity sweep. Remember, our entry isn't based off of this. It could be if that's as a risk entry, but we tend to play it safe. I want to see confirmations. I want to see changes of character. I want to see breaks of structure. So I want to see these lows go. Okay, they're gone. Not a bit unclear, so I'm just going to move up one time frame. That's a clean order block. So now this is a potential entry. So let's look on the 1 minute and see what order blocks within. So potentially you could refine it to that area, but if an order block's clean on a 2 minute, I'm happy to enter on a 2 minute. So we've had our change of character. Now, potential break of structure if we break below these lows. However, there is no, we have had that change of character. We have had that liquidity sweep. Remember, we can still enter at slightly lower risk if we don't see that break of structure. Now, you want to enter around the numbers. So ideally, I'd like to enter up at 700 because I tend to aim for 2 to 4 pip stop losses, nothing less than 2, otherwise spreads will take you out, and nothing above 4 because then the risk reward really gets shattered. So maybe around, in this case, 3 pips would be valid because you'd be covering these highs. And looking on the 15-minute, is that order block valid? Yes, it is, and you're covering that high. So I'd say this is a very valid trade to be taking. And where would you target? Head over to the 15-minute and check, where would you target? So if there's nothing too clear, which there is actually quite a clear area of equal lows over here, that's where I'll be targeting. So I'll make an 8 risk reward. So reason for this target is the liquidity. Liquidity is an area that price likes to grab. It doesn't have to grab. So it's not like fair value where price needs to eventually get up there. Liquidity is more of a target area. So yes, we have about an 8 risk reward there. So I'm going to mark this up on our chart. Now remember, if we don't see that break of structure before the entry, then it's going to be 0.5 R, so 0.5% risk. And if we do, then it will be 1. Okay, so let's wait for this. Okay, we have seen that break of structure. Will price come back up? Okay. Now, this can be a full 1R trade because we've seen that break of structure over here. Okay, so now let's go to our spreadsheet. We've already taken one trade. The date, so time is around, yes, it's New York session, it's very valid. It would be within trading hours. So before screenshot, stop loss I believe was 3 pips. Yep. So it's within our ideal range, and date is the 7th, but we haven't entered yet, so we can't mark that up. Euro US dollar. Okay, so let's play it up. In. Nice rejection. Just tag that as stops. Okay, so that would be a loss. Usually what I do is if we just tag that as stops, there's potential re-entries, but in this case there wasn't. So that would be -1. Would be a loss. What's going on? 7th, okay. And I don't know if I clicked this button already, but 2 trades in the week so far. You're only 1.5% down. So let's go back up to 15-minute. Now, could we potentially be looking for price to get to this area? Yes, we could. And that order block was quite low on the move, and the impulse has just come in now, but we haven't hit that target yet. We haven't grabbed that liquidity, so we are still valid for down moves unless price wants to grab something up here, which this one is kind of the original one I wanted to go for, but price has moved a lot since then. So let's see what we can do. So we're in that zone. Let's go to 1 minute. Okay, so can we wait for some sort of structure to form? Yeah, we have tagged out of that zone, but look at this. We tagged out of that zone around there. However, if we look to the 15-minute, is this still valid at all? Potentially, but unlikely. So we could be looking at something within this whole candle, which is an order block in itself. So I'm just going to remove this. remove this. And remember, there was a liquidity sweep, which I just deleted. There was a liquidity sweep there, represented by that arrow. So potentially, we could be looking for a midpoint move. So that's when price retests the midpoint of the order block. So we haven't yet done that, although we have tested that order block there, we haven't tested the midpoint. So now going on to 1 minute again, our midpoint, I believe, is this line. I'm gonna, okay, so that's our midpoint. So now let's kind of see what price can do. Remember, if price breaks through there, then that would be change of character. Okay, change of character observed. Okay, so change of character is around here. And now, where is our potential order block? So I'm kind of looking at this area, the potential order block, because this area, I'm going to mark it up as a zone actually, rather than a point of interest. This area has, this wick has swept liquidity above this wick potentially, and this is a supply chain forming. So we have this area of supply, which forms this area. Then from this area, we formed this area. From this area, from this area, dropped, caused that change of character. And so we could come back there and keep dropping. So valid trade. So I'd looked into there. Stop loss, it's a bit wide for my liking, 4.5. So what I usually do is I'd mark up the body of the body lows. So around 27, so I'd enter off of 25. So I like to trade from rounded numbers because that's what the banks tend to use. Having worked in a bank, I would know that banks like to trade at rounded numbers. They like to trade at 50s, 100s, 75s, 25s. So let's keep it like that. Let's go to a 15-minute, see where we're targeting. So honestly, we could just target that low still, but ideally I like to target that low just for safe side of things. So it's a 14 risk reward. Let's see if it plays out. So I'm just gonna reduce it a little bit. Reason being just being short of that liquidity. So if price gets back up there, this could be a good trade. So remember, we haven't had a break of structure, so we're risking less on this trade. We're only risking 0.5R or 0.5%. Really, people get confused between the two, so I have to make it clear. It's a 3.5 pip stop. And it's a short. It's the same pair, so I'm not going to keep marking that up. So let's trade it. We could potentially miss the move because it can react straight off of the order block rather than tapping in. Widen the order block. Okay. Okay, let's just play out for a bit. Okay, we'll be in now. So we're now in on the 7th of June. Curious though. Okay, and let's play it out. Stop loss hit. We didn't have that break of structure, so it's minus 0.5. We will screenshot that. Remember, we're early on a Tuesday, and we've taken 3 trades. We're now 2% down on a Tuesday. Remember, if you're trading a funded account, you're still not in huge loss. And remember, you probably, because remember, we risk 0.5 as our maximum kind of amount that we tend to risk on a high probability trade. So you'd be half this amount down. So you'd be looking at -1 off of 2 days of trading so far. So yeah, let's kind of wait for some sort of confirmation on the 15 minutes. So remember, there's still that midpoint there. So maybe price wants to grab that midpoint as we've done now. Okay, yes, it seems like price wanted to grab the midpoint. So let's head over to 1 minute now. So let's mark up our new 15-minute order block. So I'm kind of looking at this area potentially. And let's look at fair value gaps, potentially this area. Okay, now again, let's go to 1 minute. Let's wait for confirmations in each of those areas, and then we can trade them through. It could be a potential inducement, equal highs. A lot of liquidity being formed, so we have to see what price wants to do. Okay, so let's get in that order block. Have we tapped in? I'd say we have, yeah, just about. Had a bit of a change of character as well, but I'd like to see a clearer break of these lows. Okay, there we go. So there's a clean change of character and break of structure. So my chalk. Break of structure. Okay, now let's see where we could potentially enter. Let's just go up one time frame because it's a bit cleaner. Potentially this area is an order block, but again, we're still looking at that sort of area up there. So let's see price kind of come up a bit. There's liquidity being formed, so price should go higher. Okay, so let's look at fair value gap. So we have a fair value gap there, so that's potentially an area, but as you can see, that wick has kind of tagged that liquidity and also entered into this order block. So I am kind of interested in this area just before this impulsive move. But ideally, I want to see price come back up. So let's keep going. Okay, so we're in that area. Now, I want to head over to 1 minute and look for some sort of confirmations because this is a potential zone we could play off of. Okay, so we've had those confirmations. Okay, perfect. So we've had a change of character over here. And we've almost had a break of structure. There is a lot of liquidity and equal lows to get grabbed. So let's look at, yeah, we still have that target there. So price still could be going down there. So back onto 1 minute, I think this could be a potential zone of entry. So let's look to enter one here. That high could sweep liquidity there. So potentially this is a good trade. We haven't got a break of structure, so remember we're only risking 0.5 R as opposed to more. There's a fair value gap here and it hasn't been filled. So what I'd like to do is I'd like to potentially put my low risk entry there, so 0.5 R, and put another risk entry at that high. So I'll show you what that looks like in a minute. So initial target would be around there. So this is a potential order block, which is unmitigated, right? So what I could be looking to do is take a short from there as well, and then put my high still around 2 pips because that's our minimum. And then eventually, yes, we're still going to be targeting that low. So you're entering 0.5 risk on both, total 1% risk. So let's see how this plays out. We do mark it up as one trade because it is the same trade idea. So it's so now that you have a 3 and a 2 pip stop, they're not equal in terms of the value of their stop loss. So what you can either do is increase this stop loss, or you can mark them up as individual trades. So what I'm going to do is I'm going to mark them up as individual trades. So I'm going to hide this for now. This is a 2 pip stop. Or is it? I think this is a 3 pip stop, and it's a short. Okay, play it up. Not quite in yet. Okay, that stop loss is hit, right? So this is a minus 0.5 R. However, our other trade will be triggered in now. Okay. So our other trade over there will be triggered in now. However, I'm not liking structure at the moment, but we will see. We will see. So let's just mark this up. Just tag out. Minus 0.5. Loss, 2 pip stop. I believe it was potentially the same day. It's the 8th. Yeah, so even the first trade was the 8th. So shorts, EU. Now we've taken 5 losses in the time span of about 3 days. And I believe that's a Wednesday, Monday, Tuesday. Yeah, that's a Wednesday. So now we have Thursday and Friday left and we're minus 3% down. Remember, on a funded account, or if you're risking 0.5%, that would be 1.5% down over 3 days. So what could you think about doing? Now, you could think about just playing it safe now. You could either hold off for another week because you're not happy with how the week has gone, or another option is just have trust in your strategy. Know that your strategy will play off after a bit of work. So let's just let this kind of move occur. We are still going higher. Okay, potential change of character there. Nothing obvious for me. Okay. No clear impulsivity in the market just yet. There's the impulsive move. And that's playing off of this, but there's liquidity above these highs, so potential entries up there. Again, nothing worth trading just yet. So there, we've had a huge impulsive move. So let's go up to a 3-minute and see what we can see. We have this sort of wick that got liquidity. So if I was to clear on analysis and mark up that wick, what could we see? For price, you can get there. Okay. So it's got that. This is probably going to be the last trade in this area, in this call, sorry. And then we'll essentially just call it a day there because we are having a losing day, a losing week, sorry, in terms of backtesting, which is normal. So let's play this out. 3 pip stop. Okay, I'm just going to target this London low. So that's a potential trade. Stops of 3 pips. It's a short. Let's just quickly play it out. Okay, we're in. Good profit hit. We did have the change of character, break of structure, so it was a 1R trade, so plus 4.97 R on this trade. And as you'll see in one trade, we've suddenly shifted the dynamic into profits. Do you go higher than 15-minute at any time, bro? Yes, I do. So I only look at the daily and the 4-hour in the morning, and then once I've got my bias for the day, I look for entries and things on the 15-minute. So yeah, we do. So yeah, that was well within our trading hours as well. So can you show your analysis on a fresh chart? What do you mean by that? Yeah, so someone said, can we, yeah, I think it was Samad, he's not in the call now, but he asked a question and he said, Sorry, I'm just going to mute some people. Yeah, so he was saying, does anyone remember his question? Admit. His question was initially about, hold on.
I think you said, can you show analysis on this chart?
Analysis on a clean chart. Yeah, I don't know what he means by that, because I have no indicators. I have literally nothing on it except for Asian session range and fair value gap. So it's quite clear, as in I don't see his question. So yeah, that's a 5-hour trade. But remember, we were targeting those 15-minute lows over here. So essentially, if you wanted to play it a bit riskier, you could take it for a 15-hour trade. But again, we don't do that. We stick with what we know is likely. So we'll play it out. Just have a look. And that's why we do it. Yeah, it just reversed on us completely. But we're out. We've taken our money and we're in profit for the week. Now at this point, it's still a Monday, Tuesday. It's a Wednesday. You could say you're done for the week. 1.97 is a good amount, I guess, but we target 5%. So one more good trade and you should be at that 5%. So what we're going to do now is just clear the chart, head over to our 15-minute, and just kind of, because we've taken, our trading plan says, do not take more than 3 trades per day. And we've taken 1 on the 8th, 2 on the 8th, 3 on the 8th. So let's wait till we get to the 9th now, because we're done for the day. So 9th, it's about there. Here we are now on the 9th. Let's head over to our 1-minute chart. Okay, so new morning. Let's wait for Asian session to finish. Asian session's finished. Now, let's try play an Asian session range trade, which we did the other day. I believe it was on Friday. So yeah, we've had that Asian session range. I need to see price leave the Asian session range ideally in either direction. Okay, price is almost, yeah, price has left the Asian session range. Now, if we can see changes of character, breaks of structure. Okay, so we have a change of character. Going to a 2-minute, that could potentially be our order block. So let's mark that up. So that's got fair value gap in it. It's got potential really small but evident liquidity sweep, but ever so slightly. Like that could be liquidity in itself yet to be swept. So yes, there's a change of character. I want to see this high get broken for break of structure. Ideally, all these liquidity equal highs to get grabbed, but we could enter a trade 0.5 risk off of here, around 15, and stop loss below these lows, so 2 pips. Target, where would our target be? Asian high. So let's just target this area, this liquidity wick. Okay. I'm going to mark this up on our spreadsheet. Two pip stops. Short. Okay, let's play this out. Here we're in. Remember, if we take up this high, then that's our break of structure. Looks like these liquidity lows are going to get taken out, but we'll have a look. There's a lot of liquidity above these highs, so yeah, just about we got taken out. Remember, we didn't see a break of structure just yet. We did see equal highs though. but we didn't see a break of structure, so that's a 0.5 risk trade that we would have taken. Ninth. Okay, so that's the first trade of a new day. Could you also have access to your Excel document you use to track your trades? Do you not have a daily bias when you trade? Is your targets just Asia highs plus lows? So I do have a daily bias, right? So when I look at my chart in the morning on the daily, I'm thinking, okay, so right now I'm thinking, okay, we're very, very bearish, right? Then I head over to the 4-hour, get another bias, which is the reason why I took all these shorts, right? As compared to, oh, this one was a long. This is the reason why I took all these shorts in comparison with the long. So yes, I do have a daily bias. It's very important to have a daily bias. And in terms of, I don't just target Asia highs or Asia lows. If there's clear liquidity, which is beyond that, I will target that. And if there's clear liquidity, which is below or within the range, then I'll just target that. I don't try to be too ambitious, because when with ambition comes stupid moves. So yeah, and in terms of the Excel spreadsheet, those are available for QuickSnipes members. And yes, you'll have full access to make a copy. So now what can we see on the 15-minute? So I'm just going to play this through a bit. So yeah, we have an impulsive move. Now we have this area and we have this area. However, this is a bit of a range and there's equal highs here and there's fair value gaps above. So I'm going to completely discard this area, because I know if I mentally, if that area gets reached by price, I'm going to think, okay, there's a potential trade in there, which there really isn't, because price isn't likely to just stay there and then reverse. Yes, it lines up with a bit of structure, but price is more likely to grab this imbalance and head over to this liquidity sweep high. So let's kind of see that out. So yes, we've had a bit of a rejection, and there you go. Price needed to go up. Now we can drop down to a 1 minute and look within that 15-minute area and see, is there any clear order blocks? So we have this liquidity sweep here. So we could have an order block in there. Let's go to a 2-minute just to clear things up. Yeah, so we have an order block in there. It's quite obvious. And we also have quite a clear order block here. So I tend to only mark up the 2 highest order blocks, because yes, this is an order block, but it's not something that interests me as such. So now let's see price drop to that area. And in fact, targets would be, should we get to those areas, targets could just directly be that low, because we haven't created a new low. There's fair value to be grabbed. Let's kind of went too far in 1 minute. Okay, so yeah, so now there's a decisional area, potentially a sweep here, but have we changed character? Yes. Have we broke structure over here? No. And also I was thinking of this as a potential inducement. So I would enter off of this wick, right? Because on the seconds time frame, I'm sure there's order blocks in there. At 35, stop loss at 2 pips, which is just above this zone. And again, targets, where would that be? Definitely at least at this low, because there's liquidity there. Potentially right down here, but do you really want to be risking that? Let's look on the 15-minute to see if those are valid. Yes, we could directly target those lows, but what I tend to do is, because there's demand here, which is kind of reacting off of a nice area of structure, I target the high of the demand, so that demand can kind of be a pull area and a magnet for the market. So it's a 2 pip stop, it's a short position, and of course it's the so we're now, okay, remember we've had change of character but no break of structure, so we're only risking 0.5 R. down nice. It's a 10.95 risk reward. By this point, because we've broken all the structure, we're at break even. So it stops at break even at this point. So we just got taken out at break even. So this would be a 0R trade. And what's the date on it? 9th. But you would have gotten up to, remember, it was 0.5% risk. So you would have gone up to 2.5% profit at least. But yeah, you just really need to be in a position where you're aware of that. Was it the 9th? Yeah, it was the 9th, and it was well within our trading hours. So it was at around midday. So well within our trading hours. New York volume just about to push in. Remember, we still have this zone, so we could be entering off this zone. So let's just mark this up. Don't know if I should be interested. Okay, so what day are we at? We're at Monday, Tuesday, Wednesday. We're at Thursday at this point, right? So we kind of need to. Would you take partials at the 5.5% or leave in at B in let run? Okay, so I would tend to take partials when we've got to like a demand area. So I would have taken part in this position, of course. I would probably take take some partials, probably about 25% or 50% around here or here, but more often than not, I let the trade run purely because I know that if I'm at break even, I'm already risk free. So why would I want to, like, I'm not risking anything. So there's no chance of me losing money anymore. So might as well let it run, right? So that was my thinking behind it. Some people like to take partials, and I definitely encourage it. Why? You're 50% through take profit. Why would you risk all this 50% you just made? Obviously not in value terms, but in terms of how large the take profit is. Why would you risk 50% of this take profit size to get another 50% in? You know, just take your partials, maybe 50%, maybe 25%, and let the rest run, and let's stop set at break even. The worst thing that can happen is you've now taken 2.5% out of the trade, and you're ready to go. So yeah, you could be 2.5% up on this thing right now, but yeah, only 1.47. So yeah, we still have this area in here. So can we potentially consider entries that? Yes, you could. It's valid. Keep in mind, we also have this area here. So if I turn on my fair value indicator, oh, it's on. For some reason, fair value isn't showing, but I see an imbalance there. So yeah, so I'd like to see a bit of a rejection first, which I did not see. The reason I wanted to see a rejection was because we just smashed through this zone. We smashed through this zone. What is telling us that price won't just smash through this zone as well? Nothing really. It could potentially just smash through this zone. So I wanted to see some sort of rejection or like a nice wick on this candle. Didn't see that. So that's why I didn't even consider entering. Back on the 15-minute, because we've now just smashed through a bunch of wood blocks. So just grab that high. So now I'm in a position where we were quite bearish, quite bullish on the 15-minute, still bullish on the 15-minute. So let's go to the 1 hour, just to get a general direction of the market. Potential equal highs? No, not really. Liquidity sweep, possibly. Could this be a liquidity sweep? Let's find out. Yeah, it could. That could be a sweep, and we could be looking to enter something in here. So let's just skip one candle. Okay, clearly not. There was no entries there. That could be the liquidity sweep of this high. One candle. Okay, yes. So that's liquidity sweep. And on a liquidity sweep on the higher time frame, I tend to only look at the wick because there's order blocks in that. So let's just move down just 1, 2 time frames. Now look what we're seeing. We're seeing it's quite unclear, but I'm personally seeing this order block here. Yes, there's fair value above, but we got to consider what we have. So, and there's also this order block here. So it's just, we'll leave this large time frame order block right there. So now let's kind of see what price wants to do. Does it want to go down a bit and then come back up? I don't want to look to enter anything here because it's a bunch of liquidity there. And at this point, we're still on the 9th. So we could wait. All equal lows formed. 3 equal lows formed, 4 equal lows formed. Okay, breakthrough liquidity swept. Is price ever going to get back up? Again, we're on the 3-minute. Doesn't look too obvious. A bit of a dead market at this point. Yeah, there's nothing going on for me there anymore. Now what can we do? We can go back to 15-minute. This is the thing with trading, it can get quite slow at times, but just know if you stick to your plan, just have confidence in your plan. So, okay, so now we have this Asian session range. We broke out of it and we formed a nice order book. Now let's head over to the 1 minute. How come that whole area isn't marked up? Oh, I didn't mark it up. Okay. All right, let's go to 1 minute. What can we see? Can anyone see any order blocks here? You can feel free to unmute.
Yeah, right at the top again.
Right at the top. This one or this one?
No, the huge green one.
Okay, that's an order block. Anything else that interests you or not really?
Again, it got that other green one in the middle, but I prefer the one high at the top. That's the
Why
premium.
do you prefer the one at the top?
Because from the swing high, sorry
Yeah.
about that. From the swing high to the
Yep.
current swing low,
Yeah,
the one in the middle is like 50% of the range, but
100%, you're correct.
premium.
Yeah, exactly. So you want to be looking for that extreme move because yes, you could enter off of here, but you also need to consider the factors. There's lots of imbalances here, right? And as we know, price needs to fill those imbalances sooner or later. So with this many imbalances and quite a huge one here, I would like to just discard this zone. I'm already in profit for the week, right? Why would I want to risk that for the sake of entering a low probability move? So let's just delete that. And now we have this refined order block. Okay, so that's our potential entry area, right? So what I like to do is look at inside bars, right? Inside bars, I don't know if anyone else teaches this because I personally found this from my own testing, but inside bars are nice areas for potential grabs. So price likes to go into those inside bars and then move off them really quickly. So if you just look at the fractal nature of the markets, right? Looking at the 15-minute, there's an inside bar there. Price literally tapped into that and moved, right? Likewise, 15-minute here, price came down, tapped into that and moved. 2 inside bars here, price tapped into that, moved. Yes, it came back, but it still didn't break the low and then it moved. It's just even here, although it didn't play off. So this inside bar, price tapped into it, rejected, and then moved in the opposite direction. So it wouldn't have, if you were taking a trade from there, no, you wouldn't have to take profit, but you would have seen the rejection. Price struggles at inside bar areas. That's because they're ranges, and ranges, you know, full of liquidity, full of orders. So yeah, so we're on our 15 minutes. So let's go back to 1 minute. So yeah, you have that green area. So with the inside bar, I like to mark up just the inside bar. However, if the stop loss is less than 2 pips, then I go to the bigger trade. So yeah, it's 1.5. So I wouldn't mind entering a bit lower at like 400. That'll be a 2.5 pip stop. And where would I target? So again, looking at 15-minute. I know Cedric knows this, so go ahead. Where will we target?
Sorry, my mic was on mute. The Asian low.
Exactly, correct. So target Asian low. What is also seen at the Asian low?
Equal lows.
Perfect. And what is present at equal lows?
Liquidity.
Perfect, man. So we know that's a good target, right? So this is our trade. It's a 11.3. This was the trade we actually entered, didn't we?
Yeah.
This is the trade, yeah. So we'll target these equal lows, so about 11.4. Yeah, I actually posted this on our QuickSnipes social media as well. So of course, backtesting is meant to be done in hindsight, but sometimes you do come across moves you took yourself. You can't do anything about it. You will remember them, especially the big wins like this. So stop loss 2.5 pips. Entry. So it was a Friday. It's a short.
You know, if we held this trade throughout the whole day,
yeah, we would have been like 40R or something.
Crazy.
Yeah, it was insane. Like, yeah, I left partials. I took most of my profits. I left like what 7.5% of my risk in. So I risked like 0.5, and if you can calculate 7.5 or risk 7.5% of 0.5, you'll notice that yeah, I left a little bit in. So it was about 25 running, £25. And then I looked at my chart later on, and I was like, I closed it here, right? When it got to that final Asian.
I think you closed it lower. I think you had a lower target than us.
Yeah, we did. There was something on the 15-minute. I think we saw. Or was it? What did we see? We saw something. Oh yeah, we saw this area. I think.
Because of fair value gap, I think.
Yeah, exactly. We turned that off. So let's head over to 4-hour. Maybe it was something on the 4-hour. I'm not too sure. Yeah, there was this massive fair value gap, which I expected price to fill. So I was targeting around here. Yeah. Just mark up as take. Mark up as take profit. For some reason, it's not, there's no, yeah, we'll just mark that up over here. Take profit. So yeah, I kind of was looking at that area to take my profit. So we did actually mark that up in the end, but I took the high majority of my profits at this take profit, but you would have easily had 16R with fair intention. So yeah, so we're gonna mark this up on our spreadsheet. It's a very valid trade. Oh, already done that. So yeah, 2.5 pip stop. Okay, let's play it out. We have had that change of character over here. And even breaks of structure over here. So this is a 1R trade. At this point, by the way, at this point over here, we form this low, right? And then we form this low, and we form this low. So much liquidity there. I knew price would come back down. So yeah, my break-even area was here. More extreme Asia low. That's mad. Well done. Yeah, we caught this on a live call, and Cedric was on it, so yeah, he can vouch. So that was that low. So once we came up here, and then came down, I was saying that when this low gets taken out, we can put our stops at break even. Now, one of our members, Saul, actually did so earlier. Reason being, he was so close to losing his funded account. So he was even only risking 0.1% in this trade. So that's how close it was. So I'm just gonna move this along. Yeah. So we'd be at break even at this point. Take profit here. That's 11.4R. As you can see, this is why patience is so important, right? You could have a really bad week, but that one trade can change it, right? So did I stick to my plan of not taking more than 3 trades a day? Yes. At this point here, right? If I delete this just for a second, you'll notice we're minus 3% down there. So if we were risking 0.5%, minus 1.5% down, right? But we know that if we stick to our plan, because this strategy has been backtested so extensively, we know that as long as we stick to our plan, we will come out in profit in the longer term. Even when I was looking at this, right, you could argue that even this week could be a losing week, but even if it is, you'll only lose maybe 1 or 2% by the end of the week, maybe 5 are max. And so if you're risking 0.5, which is what we recommend, you'd be losing 2.5%, which is nothing for a week of 9 trades, right? People are risking 1% a trade. If you lose every single one, then you'd be losing 9%, which is why one win changes everything. So yeah, we captured that, and that was our final trade because it was, because the volume was so high that there was no opportunities for price to come back up. Now, if you look, as Cedric was mentioning, we play this out. Just look at how far it went, right? A bit rangy. Okay, so that's currently what price is at. So let's look at the 4 hour and see why it could be there. Fair value gap, boom. So if we were targeting that next fair value gap, and that demand zone potentially, you could be looking at a 52.4 R trade. Yes, we closed out a bit early, but that would have been what you were looking at, and that trade would have lasted a space of around 8 hours, 28 minutes. Yeah, decent. You would have got in around 6:30 a.m., got out around 3:15.
That's a day shift.
Pardon?
That's a day shift.
Yeah, literally, while you're working a day shift, if you took this trade before work, for example, later on, and you didn't get a chance to take partials or anything because you didn't get a chance to see your phone, you would have been a very lucky person. 6:30, right? You would have entered in, probably would have left the trade alone, been at work, come home, maybe because your shift start at 9 to 5. Let's say you're working at 9 to 5, you're at 9 o'clock, you would have been well in profits. And by the time you come home around, I know you end at 5, but let's say you even come home at 5, you'd be looking at, whoa, I just took 52.4 R. Now, if you were trading even on a funded account, because we had that break of structure and change of character confirmation, we're risking the full 1 R, so 0.5% on a funded. So you'd be looking at around 26.2%. Let's say that 0.2 covers commissions. I know you probably wouldn't have that much in commissions, but let's say just 26%. That on a funded account, that's 26K, and you'd be keeping 80% of that. So I'm just going to do the math real quick.
Around 23, 24K.
0.8 times 26. Yeah, around 20.8K in profit off of one trade just done out Friday. So imagine that could have been a 52.4 R. And these trades are more swing type trades, but not really, because you're only holding them for 8-9 hours. You're holding them within a day. It's still an intraday trade, but you're hitting huge risk rewards. So that's kind of the scope of the strategy and what it can achieve. But again, we don't recommend just targeting these massive targets every single time, only when there's clear reason to do so. So there could have been clear reason here when we saw that 4 hour change of character. We knew that price was at least going to get to this demand, but probably the fair value gap over here. So easily, this wouldn't have been something that, it would have been a realistic trade to take, let's say. So I'm sure a few people actually caught this move in the world. I'm not saying half the world did, but I'm saying a few people did. And this could have been something we caught too. But anyways, what I'm saying is that the strategy works. And as you can see, the backtesting call has just proven that again for this week. 12.87, we target 20% a month, right? Recently, over the past year, we've seen more than that. So even with a strike rate of 20%, I'd say if you have a strike rate of less than 15%, then your trading is based off of luck, right? But if you have a strike rate of more than 15%, then there's some strategy involved. And if you have a strike rate of more than 50, you might just be in a position where you're taking profits too quickly. I'd say a healthy strike rate is around 35%. A good strike rate would be above 15%, and a useless strike rate is below 15%. So right now we're looking good, but not as good as we want to see. Maybe we could have avoided some losses here. At the end of the day, it's all about consistency, knowing your trading plan, maximum of 3 trades a day. We took 3 trades on Tuesday and 2 trades on the Friday, two trades on every other day except the Monday. And then we took 1 trade on the Friday, and that Friday outweighed all our losses. And potentially more if this trade was involved. But yeah, that would have been 52.4. Let's just see what kind of numbers we're looking at. Yeah, so you would have been looking at crazy numbers. That 1%, well, that 1.47% would have been meant nothing to that trade. And yeah, so that concludes our call for today. I hope you guys enjoyed. Hope you guys learned something. And we'll catch you guys tomorrow. Hopefully tomorrow we have our weekly market forecast. We'll be breaking down trades for the potential week ahead. And usually those aren't really compulsory. Those are more for people who want a general overview of the market. But usually the more likely calls that where the trades actually play out more often are the morning calls. And of course, we're currently doing a bit of an FTMO funded challenge, my Forex Fund support for a few of our members. So yeah, hope you guys enjoyed. This will be uploaded in our backtesting recording area in the Discord. I will just show you that now, just for those of you who are new. So yeah, it will be in the backtesting recordings. Like we record all our backtesting sessions, we post them here. We'll be in there. And if you are a member, you'll also notice that we have some announcements. So we have a new mentorship video, liquidity concepts, which has actually been posted in Market Chest as well. So make the most of that. Okay, thank you for watching. Do we have any questions?
No, man, thanks. Oh yeah, I asked one question in the chat. I don't know if you saw it. I was asking, do you not look out for news events?
Oh, I didn't see that. Yes, I always do, always. But the thing is, when backtesting, it's kind of hard to track back because you're kind of looking at what are high impact, what are low impacts. I tend to just trade the technical analysis side of things because I want to see if the strategy works, even if I wasn't looking at news, because then I know that if I was looking at news, it'd work even better. So I always like to take my backtesting in the worst scenario possible, and that being, oh, we could have a high impact news that could take us out of all stop losses. So you know that you're making, you know, with these losing trades, I haven't checked the news, but potentially these could have been news events that took us out, medium to high impact news events. I don't ever look at low impact news and think, yeah, no, I'm not trading this. Unless there's a series of low impact news events on the same day, on the same pair as well, then I make, because a load of low impact news events put together make a high impact news event in a way. So yeah, if you have low impact news events, 10 of them on US dollar and they're all negative numbers, US dollar is bound to move down. So yeah.
Cool, makes sense.
Perfect. Any other questions? Nope. Okay, catch you guys tomorrow.
Take care.
You too.